What is a mutual fund? A mutual fund is a way for people to pool their money together and invest as a group. That money is then used to buy a mix of investments, like stocks, bonds, or property, chosen by a professional fund manager. The fund manager researches companies, decides what to buy and sell, and aims to grow your money over time. So instead of picking and buying lots of investments yourself, the fund does it for you. You own a small slice of everything the fund owns. Think of it like a basket of investments, and you own a piece of the basket. Just to clarify, you don't directly own the individual shares or buildings inside the fund. You own units in the fund itself. The price of each unit can go up or down depending on how the fund's investments are doing. That's what affects the value of your investment. Some mutual funds are actively managed, meaning the fund manager tries to pick the best investments to beat the market. Others are passively managed and aim to match the performance of a market index, like the FTSE 100, rather than outperform it. Passive funds often come with lower fees. Why does it matter? Mutual funds make investing easier, especially if you're just starting out. They give you access to a range of investments in one go. That means your money isn't tied to just one company or idea. It's spread out across many, which helps reduce risk. If picking individual stocks feels overwhelming, mutual funds do that part for you. They're like a ready-made portfolio, and they're managed by professionals, so you don't have to track the market yourself. It's completely normal to feel unsure at first. Mutual funds are built to help smooth the ups and downs by spreading your money across lots of different investments. Most funds also let you invest regularly, sometimes from as little as £25 a month, which is helpful if you want to build up your investment gradually. A simple example, imagine 1,000 people each invest £100 in a mutual fund. That's a total of £100,000. The fund manager then uses that money to buy a mix of investments, maybe shares in Tesco, BP, and Apple, plus some government bonds. You now own a small share of all those things, even though you wouldn't be able to afford them on your own. As those investments grow or earn income, the value of your part of the fund grows too. Mutual funds can make money in two main ways. First, if the investments in the fund increase in value, that's called capital growth. Second, if the fund's investments pay out money, such as dividends from shares or interest from bonds, that's known as income. You can usually choose whether to have that income paid out to you or reinvested to help your fund grow even more. What else should you know? Mutual funds are easy to access. You can buy them through an investment platform within an ISA, or even through a workplace pension. If you need your money back, it usually takes a few working days for the sale to process and for the money to reach your account. Just keep in mind that you might get back more or less than you originally invested, depending on how the fund has performed. There's usually an annual fee for fund management, which is often a small percentage. It's a good idea to check this because higher fees can eat into your returns over time. There are thousands of funds to choose from. Some focus on long-term growth, others on providing regular income. Some invest only in the UK, while others include companies from around the world. Each fund also comes with a fact sheet or a key information document, often called a KID. This shows what the fund invests in, how much it charges, and how it has performed in the past. It's a helpful tool when you're comparing different options. Markets can rise and fall for many reasons, like economic news, interest rates, or global events, and those changes affect the value of your fund. That's just part of investing. But mutual funds are built to help you stay balanced through the highs and lows, especially if you give them time to grow. To sum it all up, a mutual fund lets you invest in a wide range of assets with help from a professional. Your money is pooled with others, spread across different types of investments, and managed for you. It's a straightforward way to grow your money over time, even if you don't want to pick your own shares. While all investing carries some risk, mutual funds are designed to make the process easier, more balanced, and more accessible, especially for beginners. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.